Insurance companies need insurable communities. And yet the concern is with climate change in particular, that what climate change is going to lead to is more intense and frequent severe weather events. And as Swiss Reinsurance has pointed out, that some of these weather events may be so unique or so intense that communities become uninsurable, if you will, because of the concentration of exposures. The first would be tax credits to individuals for mitigation activities. Currently, people who spend the money to elevate their homes, add shutters, the kinds of things that people might do for their individual properties, tax credits associated with that would be a good idea and a good incentive. The second would be to use disaster assistance at the federal level as incentives for state and local communities to do risk assessment as well as mitigation activities. In other words, to create a carrot, if you will, hopefully not a stick, but a carrot with disaster assistance for communities to be doing the right thing by evaluating climate risk and weather risk, and give them credit, give them an incentive to do that in the form of disaster assistance after an event. The draft OCAP report talks about the National Flood Insurance Program using risk-based rates. We think that's an excellent idea, and it does need to be partnered, if you will, with the benefit for low-income or fixed-income people to have some subsidy or some program that provides them with some financial incentives. But don't embed that in the rate. In fact, let the rate show what the flood risk is, whether it's, again, a public or a private program. We think federal standards for local and state building codes related to climate would be a good idea. That's fairly controversial among local communities, as you have federal intrusion in the building codes area, but we think it would be a good idea. We do think, as the OCAP report says, to increase funding related to relocating properties that are repetitive loss properties. We think expanding the Coastal Barrier Resources Act, which has been around for 30, 40 years, is another way to think about removing incentives provided by federal resources for development in coastal areas, but preserve coastal areas in the natural habitat. We think the federal government should lead by example, that federal properties, whether they are properties that are managed by the federal government or acquired by the federal government, that the federal government should indeed be looking at climate risk, a forward-leaning, future-looking approach to evaluating what properties they acquire or what properties they use for federal facilities.